I want to welcome Alex Tsukernik. He is the CEO of a very exciting early stage copper and nickel royalty miner. Welcome, Alex.
Thank you for having me.
Alex, if you wouldn't mind just giving us a quick overview of the company and why you're excited about it.
Okay, of course. So look, we started the company back in 2018. And the central reason was that what we saw occurring in the energy transition back then, it was still, I think, an earlier stage of consciousness, I think, for most people. But what we saw was really just a complete transformation of the global economy. And I think more comprehensive than any movement we've ever seen in history, because it's literally like an industrial revolution that's happening. It's changing the way we power, it's changing the way we move, it's going to change the way we eat. I mean, it's going to change everything. And it's all happening at the same time in every country around the world and using the same tools. And when you actually look at the tools that are being used, what we saw is that copper and nickel will really become sort of the driving force commodities of this age. And so what were already well-known metals and sort of commodities, I think we saw them becoming much more strategic than they had been before. And I think Goldman actually came out with a report yesterday calling copper the new oil, which is basically the thesis we've been operating on since we've begun. So Goldman came out with this call yesterday calling for, I think, $15,000 a ton copper. Well, yeah, but the thing is, like, all these numbers are still trivial, because when you look at the billions you've got to sink and the price you need to feel comfortable with that, I don't think that this 15,000 is any kind of cap. I mean, like, this can get out of hand in a hurry. I mean, look at, for instance, Teck Resources, a phenomenal company. I think they're capped around $10-11 billion right now. They're finishing Quebrada Blanca, which is one of the best development projects on the planet, easily. That's a cost of $7 billion. Okay,
wow. So
you have one incredibly successful company run by really strong people. The market's giving it a cap of 11, and the headline project, which is cost them $7 billion, they'll deliver about 250-300,000 tons of copper a year. Now, you look at the deficits being forecast for 2030. Goldman was around 8 million tons. Trafigura was at 10 million tons. So take that 8 to 10 million ton number. So Quebrada Blanca, which is an absolute massive undertaking, will fill about 2% of that. Taka, which is what we have, they'll fill another 2%. But understand, like, these are enormous undertakings. So I mean, you're taking out of commission some of the most important miners in the world. So you got to go come up with it at a 96%. So what I'm saying is, if you want to see the flood of capital required to actually deliver that copper, I would not think of 15,000 a ton as a big number.
That's amazing.
I think we're looking at something which is, given the level of risk you're asking people to take, capital, ESG. I mean, listen, everybody knows how easy it is to bring a big copper mine to production. So if you want people to go and take that multi-layered risk over decades, you're going to have to raise that price. And I don't think people fully realize just how high that price probably has to go to fill it in there. Copper is literally the main commodity of the electric age. Like, there's no scenario in which it doesn't get used. Kind of, whether it's wind, whether it's solar, whether it's electric vehicles. I mean, we didn't choose this lightly. I mean, we looked at the whole spectrum.
Right. No, you're right. Copper is just such an obvious use case. So you do see a supply demand deficit for copper currently and for the next few years?
I think you're looking at a multi-decade deficit, because the thing is that you're literally asking. So right now, you're talking about a $200 billion market a year right now.
Yeah.
And the energy market is what, $4 trillion a year? So you're going to be asking you're going to be asking all that copper capex to go, that comes in, to go and replace a big part of the $4 trillion a year market.
Right.
And so I don't think people have thought about carefully what the implications are. And so you're going to need so much of this stuff, that I do think that, but the regulations aren't getting any easier. I mean, no matter where you go, and understand, and rightfully so. Like, look, I mean, the mining industry is not the cleanest industry in the world. Everybody knows that. There's real concerns that come with that. I think regulators and countries and governments are rightfully asking sort of the hard questions. but something has to give. Yeah, I think something here legitimately has to give if you're going to do this. So yeah, look, I don't think I've never seen anything like this. I mean, I remember the steel boom of the 2000s. You know, I had a front row seat to that. I don't know where it went. I think from like 20 to 200 or something like that. And then that was driven really just by the Chinese steel industry, kind of, and all the infrastructure requirements of China. Well, now you have the whole world asking for this commodity more than any other to go fulfill a global industrial revolution. So I would not be putting any caps on the copper price right now.
So there's clear. So you're saying there's a supply deficit. How about demand? What are the? I mean, it's pretty obvious, right? But what specifically is going to cause the demand to skyrocket?
Well, so look, the supply side, I think we've covered, and I think like you've got mines running off. You've got mines running off. It's obviously tough to bring new stuff online. So the grades are declining around the world, even sort of in the Chilean mines, which are sort of the largest and more highest grade. You know, you're seeing that tail off quite a bit. On a demand side, I mean, just for perspective's sake, so you're going to be rewiring your whole power grid to be, say, wind and solar and geothermal and the like. So wind and solar right now, I think, are about 4% of total U.S. energy.
Yep.
So you've got a long way to go, and that's a super copper intensive application. Electric vehicles, you know, so you've got, I think, 10 times more copper in an EV than you do in a internal combustion engine car. So I mean, so just those two applications, power and automotive, are going to fundamentally transform how much you're going to need. I mean, I think basically you're probably looking at, on an annual basis, you're probably looking at an increase of a good 5-7 million tons a year just on those two. And so the demand side is going to get pretty explosive here, because you're literally rewiring the whole grid, you're redoing your whole automotive sector, and you know, it's just you're asking this commodity to go and basically sink the capex to replace the current energy space. And so the numbers here get pretty high if you look and see what happens. And then so you combine depleting mines, difficulty of supply, exploding demand, where this is really becoming the main commodity you're going to use for the whole industrial revolution. I mean, hopefully you see what we've been seeing.
Is that why Goldman called it the new oil? Because just like oil used to run, you know, kind of the old economy, copper is going to run this new green economy.
That's exactly right. I mean, this is a fundamental change. I mean, look, I'm 42 years old, you know, so I grew up sort of in a somewhat different era from the current young generation. And one thing I see, you know, very clearly here is, you know, the questions of environment and quality of life and sort of clean energy and climate change. These are fundamental existential questions for this generation. You know, this is not a choice. This isn't a nice to have. I mean, just being brutally honest, I mean, we grew up in a generation that didn't think about this stuff. I mean, it was just a different time, different age. But I do think that kind of what's happening now, I mean, it's very difficult to miss it. I think this has become a real life imperative for a lot of people. And I think government policy is beginning to reflect that. You know, I don't think I've ever seen so much agreement among all the different countries in the world on one subject. You know, usually people will be sort of kind of have different minds about it. But if you look at it, whether it's US, whether it's EU, whether it's China, whether it's Africa, whether it's South America, everyone is kind of on this train. So it is absolutely a massive industrial revolution like we haven't seen before.
Very, very useful to know if you're a copper investor. So we talked a lot about copper. What about nickel? So nickel, before we start, I have a quick question on nickel. So sure. Didn't Elon Musk say he's going to try to transition away from it in the batteries because it's so expensive and move to, did he say lithium? I'm not sure. You would know more about that.
Yeah, he's got a statement every day on something. So I think he wanted, you know, his batteries are still, I think, predominantly nickel batteries. And so he was begging the miners to mine more environmentally friendly nickel, but it's not that easy to get that environmentally friendly nickel. So he actually just took a stake in a nickel mine in New Caledonia, called Goro, which is so he's definitely not leaving nickel. But I do think he is trying to exert more pressure on a nickel space, and so there is a battery type called LFP, which is lithium iron phosphate, which works well for lower range cars. So for the lower performance segment, both Tesla and BYD, which is a Chinese company, they're going to lithium iron phosphate. But the nickel batteries is what you're going to need for the majority of the cars, because you need high performance, you need range. Otherwise, you're just not able to really move in this thing. So you're probably going to have a mix of the nickel batteries and these LFP batteries, and kind of they're both going to have probably a pretty prominent future in the industry.
Okay, so nickel will still play a huge part, even though there is a small movement to transition over to lithium.
Oh, for sure, but that's always been there. The question is going to be the proportions in terms of how much is going to be sort of the nickel dominant batteries, how much is going to be the lithium dominant batteries, and I think that's kind of a constantly changing mix. But it's difficult to see a situation where it's just one of them.
NOVR.V is clearly positioned to take advantage of this. So can you just talk about the dynamics behind it and what it entails?
Look, a thesis is fine, but you actually got to do something unique, I think, to create a real company. And so what we did was the two founders of the company were myself and Brett Heath, who was the chairman. And he started a very successful royalty company in gold and silver called Metalla Royalty and Streaming. And what he did with Metalla, he picked up royalties on he picked up existing third-party royalties on top-notch projects. So you're not going to the miner to originate the royalty, because if you go to a top-notch miner to originate the royalty, it's going to be exceptionally difficult. But instead, he went to the people that already had the royalties on these projects, more often than not from discovering them and then selling them to the miners. And very often when you find these things sort of on the pre-production basis, so you're saying that last stretch before production, people want to get some liquidity. You know, they want to get maybe some cash, they want to get maybe some stock, a mix of both usually. And so Brett created a phenomenal company from scratch, really by going to people who had royalties on these good projects and picking them up for a mix of stock and cash. And Metalla, I think, has been probably the best performing royalty company in the gold and silver universe since he started it. So it was really done an exceptional job. And then, we had known each other for a good amount of time. And then, I grew up actually very much in the old economy. I spent most of the 2000s as a merger and acquisitions advisor in the steel space. And so steel, iron, coal, and we sold that firm. And then we built a junior mining financing business out in New York from Falderman and Renshaw. And to me, kind of when I thought of, say, China, I thought of pollution, because that's kind of what I grew up with. And I remember I was at a conference in Lima, Peru, in like 2016, 2017, and a gentleman from the Chinese government got on stage and he said, look, these are the commodities we wanted in 2009, 2010, and those coal, iron, so all the things that I was used to. And then he says, this is what we want now. And I said, copper, nickel, lithium. And I said, oh man, like if the Chinese government is now going green and really making it a key policy plank, and this is no longer just a fringe idea. This is going to go mainstream with everyone, and so I started thinking more seriously. Brett and I were in constant contact, and we saw this happening, and we said, you know what? Why don't we start the first copper and nickel royalty company? Because these will be the big commodities. Copper is going to be all the infrastructure, electric cars, electric car vehicle charging stations, like literally the main commodity of the electric age. And nickel, if you look at the battery technology, dominates the batteries. So the two most popular types of batteries now, which is NCA and MNC, they're 80+% nickel. So they call them lithium ion, but they're really nickel batteries, to be perfectly honest. And then kind of previously, and then what we really wanted to do was focus on the royalty model, because if you look at what's happened, say, on the gold silver side, that's really the way that investors have chosen to invest in the commodity. Because the royalty company gives you very low cost structure. You get exposure purely to the revenues without worrying about the cost of the project. You can diversify much easier than you would by building another mine. You just buy another royalty. So when you look at the cost of capital the royalty companies have now versus the miners, it's pretty impressive premium. I think at one point the gap was like 3 times the multiple at which they were trading. And it's easy to see why. So we said, you know what, why don't we go and just take a look at what's happened in the gold silver space and be the first mover in copper nickel, which previously were ignored. I mean, people were like, well, we know they're industrial, we know they're important, but they're not strategic. And I think the reason why gold and silver royalty companies have traded so well is because gold and silver have been strategic metals, for all the obvious reasons. But what we saw here was that this is now becoming strategic. So why don't we go ahead and kind of use the first mover advantage to go and buy existing royalties on some of the world's best copper nickel projects. And that's exactly what we've done. So we built a global, we started with a global team. I mean, we both had very good relationships in the sector. So we saw the opportunity for us. So we kind of wanted to build this thing from the beginning to be ready to grow up. You know, you don't want to have that small company mentality, even when you're early, because that's kind of when you start making real mistakes. So we always saw this as a company that can grow to be very large. But at the same time, like the first financing, which is brutal. I mean, we raised at $2.6 million back in January 2019. I think every 10 grand was a struggle. Just because, well, it was a tough market. I think when you're going out to raise money for something new, I mean, because people said, oh, royalties in copper and nickel, like, no, you need to have gold. I mean, I think if I had a nickel for every person who told me I needed to have a gold royalty, I'd be extremely wealthy by now. So I think, that was the common theme, but that's actually what the opportunity was. And so we had a team kind of in all the key regions to get in touch with these royalty holders, because like Europe, I mean, most of what we've done, if you see, has been in Latin America. And that's a very specific place. You need to have people in your team, and we do, who have those relationships, really can get through to them. I mean, both on the evaluation side and negotiation, making sure that the deals you do fit in the public company model. So if you look at, say, the Taka deal with it, I'll touch on that later. We had 4 lawyers working on that deal. Just because you need to have so much familiarity and expertise and to have that function smoothly. And I think we sped through that in record time. And I think that's more just a function of the preparation and the thoroughness with which we approached it from the start that allowed us to move quickly with discipline, kind of through something that's not easy to do at all. And so, look, we we saw an open field. And if you look at copper and nickel, they're extraordinarily capital intensive. So you don't have the middle class of projects that exist in other commodities. It's either the super large or probably not going to produce. And so if you look at all the incremental production, copper production coming into the world, it's basically the mega mines. So if you don't own a royalty in the mega mine, I mean, to be honest, you don't have anything, because that's the only stuff that's going to be worth it. So, but again, we had an open field, so we picked up royalties in some of the best projects out there with Nueva Union, Taka, Vizcachitas, Twin Metals, Dumont. I mean, these are all sort of tier 1 projects that are slated to go into production, I think. Really in the first leg of the energy transition, permitting, obviously. And so look, we're really excited. And now I think what you want to do with the company is just kind of keep scaling it to a point where you have real critical mass in the sector, so that any investor who wants to get the exposure to these strategic commodities and assets, will just buy Nova stock instead of buying something else. So that's really the goal.
So you did have first mover advantage, which is absolutely huge, because you guys saw an incredible opportunity in the market to take advantage of. So what did you do with that first mover advantage? And how many royalties do you have now? Because I'm sure you took advantage to acquire as many as possible, as early as possible, right?
Yeah, look, this is a business where quality beats quantity any day of the week.
Yep.
So you really got to focus. And we've got 18 royalties right now. We've got 5 on major development projects, which is really, I think, 99% of the value of the company right now. Yeah. Just to be frank, because the thing is that number of royalties doesn't really matter. I mean, look at Wheaton Precious, a phenomenal company in the gold and silver streaming space. I don't know, they have maybe 20 assets.
Right.
So I think it's more about what do you have rather than how many you have. So what we looked at when you talk about the first mover, we saw that as the opportunity to pick off the cream of the crop. And that's really what we focused on. I think we've done a good job with that so far. We've got more that we want to add on here in the near future. So that's really the focus of the company.
Great. So you were able to get some royalties on some of the biggest, most legit mines, which you're saying is important because the bigger the better, right? As far as copper goes. Well,
it's the bigger and it's bigger and better. The thing is, because look, it's just for perspective's sake. I mean, this business is extremely complex and technical and capital intensive. So take Taka, for instance. So that's probably the royalty which is worth the most of anything in the portfolio right now. And that's now First Quantum's next major priority. They've come out and said that. So while they're building that, and I'm sure it's going to be multiple billions and it's going to take them years, they won't be able to do anything else. probably in this time. You can't evaluate closely enough what you're doing in this business. So there's no such thing as, there's this popular idea in mining, which I could not disagree with more, that there is value in optionality. There's actually zero value in optionality if you don't have the right stuff. I mean, you can go get a bunch of moose pasture and say you have 300 royalties, but you don't have anything. So like nothing here is actually worth anything. So you need things that actually have a place in the world. I mean, I think that's what you really got to focus on. So, we looked at it very fundamentally. Say, okay, look, who produces copper? The really big companies. What do you want to do? Try to get as much of their pipelines as possible so that you actually have a path to something real. Everything else that's out there, of course, you always pay attention, and we have quite a bit more that we want to add, but you never want to fall into the optionality trap, because when an asset has strategic value, then there's obviously incredible optionality on top of what you're buying it for. If the asset doesn't have any clear strategic value, you just have a liability, nothing else. And so that's kind of how we look at it.
That's interesting, because I've done some research on Metalla, and it seems like their model is to acquire development assets because they want to keep the gold in the ground.
Absolutely.
So they can have an option on the future gold price instead of just getting these cash flowing assets that deplete the ground. So do you have the similar model to that, or do you want to go for the cash flow producing assets right away, or would you rather get the future production?
I think we're very similar in that respect. I mean, basically, we've bought development assets with some of the best operators. They've bought development assets with some of the best operators.
Right.
So I think the optionality that they talk about, they actually have.
Okay.
Because they have the quality.
Right.
You can only have optionality if you have quality. If you don't have quality, you can't have optionality because it's worth zero. And so that's the issue, is that I think what Brett and the rest of the guys have done an exceptional job is in the business, which is very competitive. They've been the rare group that's very disciplined. And if you look at what they've done, they've consistently bought the right things at reasonable prices. But they've been very careful about what they touch. They don't just go after random stuff.
I see what you're saying. Yeah. So, and they focus on development assets, which means the gold's already in the ground and it's been found and they're building the mines. Whereas what you're saying is right, you could buy a bunch of exploration assets and hope that you have some optionality, and right.
That's a different game. Listen, for instance, look at our portfolio, right? So we've got 5 large development assets. That's, like I said, probably 99% of the value. We've got one exploration property, which looks really interesting, called Janus Lake in the Saskatchewan, and that's Rio Tinto exploring that. And that might become a big copper project, so that's easily one of the better exploration projects out there right now. But it's exploration. I mean, just to be perfectly clear, you have to understand that in this case it's Rio, and they definitely. The reason we bought it is because we thought there was a chance that it can become something more. But then you look and say the rest of what we have 12 pure exploration royalties, and it's nice to have those. I mean, listen, if you can get them as part of portfolio deals that don't cost too much, you always want to be adding that super cheap exposure. But just don't fool yourself into thinking that it's something more than what it is right now. So I think that you have to be very disciplined in this business. It's very easy to fall into something which doesn't make sense, and you have to really underwrite all of that up front if you want to have a company that really succeeds. So we've been super careful on that front.
Okay, cool. So got it. So how does your portfolio break down, as a percentage development, exploration, and currently in operation producing?
So we don't have any producing assets at the moment, because the way we approach this, we built a company literally from scratch. So we had, the first capital raise was $2.6 million. We spent $2 million on the Dumont acquisition, so we had $600,000 working capital, and then we spent all of 2019 just mapping out the universe and building relationships with the royalty holders that we were interested in and the like. And then the last 12 months, we've done 6 major acquisitions. So that's just been the process for us. And then what you want to do, I think, here is when you build value from scratch, especially in this business, the real kicker is buying a critical mass of development assets that can then go into production, because then you get the pricing, which makes sense. You're not paying full value today. You're giving it time to develop. You get in the quality. If you went out and bought a big cash flowing royalty from the start, you would just dilute your shareholders so much that you wouldn't be able to generate any real value. So we picked up a really strong development portfolio while creating value every step along the way. I mean, I think we've raised about $40 million of cash so far. I think the value of the company is about what, 320. So you've got a good 7-8 times capital return on the money you've raised. And so that's kind of been the strategy. And now we have a real base of value. We definitely will be looking to add some cash flow to the portfolio as we go. Absolutely. But so far, I think it's pretty much 99% development, and the value is 99% development, 1% exploration, and that's the breakdown.
Okay, yeah, and I think that's what investors miss. They might look at like the price of the stock to sales. In this case, there aren't any sales, but there's a high net asset value because you have a lot of development projects. So that is a really important thing, I think, for people to realize, right?
When you look at what's happening in the space, I mean, we wanted to create the best way for anyone to invest in this sector. I mean, why did we start the company? It was that. And so I think that you're buying two things. A, you're buying kind of obviously the projects we bought so far, but when you look at how quickly we've grown the company and kind of, I think also the quality we've added, if you're trying to estimate the value of it just based on what we have in the last 12 months, you'd be constantly coming up short because we kept adding to the portfolio. So I think that eventually, obviously, look, I think this will be cash flowing a lot and for decades to come because these are huge assets. I mean, we're not talking 10, 20-year mine life. We're talking like 40, 50 and above.
Wow.
So the average copper mine in the top 60 in the world right now has an average expected life of 77 years. So that's a quantum which is not like anything else that you see in the sector. I mean, these are massive, massive projects. So our mines, the way it looks like right now, I think the bulk of our portfolio is slated to come on stream between 2025 and 2030, which is basically in copper terms tomorrow. Because it just takes a good 7-8 years to develop a project from the time that you have a fully bankable reserve. So permitting, construction. I mean, this is not a small. This is not a quick process.
Can you just talk about kind of your most material asset?
Yeah. Before I go there, let me just maybe talk a little bit about the nickel side. Yeah. So what we really wanted in nickel, if you look or see what we own a royalty on Dumont, we own a royalty on Twin Metals, which are two of the largest nickel development projects in North America. And so Dumont is fully permitted in Quebec, kind of right there, ready to go. And I do think you're going to see regional supply chains pop up around the world, kind of on the automotive space. So you're going to have one in Asia, you're going to have one in North America. And I think what we wanted to do was own the nickel assets that will have a chance to be a part of the North American supply chain. Because I think it'll be very locally driven, I think, this segment. And so that's what we've done. But in terms of material assets, I mean, look, I think my favorite acquisition, and I think it is definitely, I think the most valuable asset we have right now is the Tsukernik royalty. So that's, a very unique asset. There's a very small handful of large greenfield projects that are being advanced by major companies, and this is one of them. And we own a 0.42% royalty on that, which I think at today's prices, the forecast production will be 10 million plus a year to NOVR for many years. And so
that's once it gets into production.
Correct.
And that's at the current nickel price, which
that's a current copper price.
Right.
So I think look, that's a really exciting property. Now we bought that in two pieces, and I think in many ways, putting the financial stuff aside, I think it's great when people respond kind of to a company that way. We bought it from a group of families in Argentina. And so we bought the first piece, which was a 0.24% NSR for 80% cash, 20% stock. And understandably, kind of they wanted to get some liquidity, and kind of they took this first deal was mostly in cash. However, what happened was that the stock that they got performed extremely well because we were growing the company and the market was beginning to really respond to what we were doing. So their stock piece actually wound up being worth more than their cash piece. And then they wanted to sell their remaining interest, which was a 0.18% royalty. And this time they said, we really like what you guys are doing and how you've behaved with us. And so, in this deal, we want to take it mostly in stock. So the second deal was actually 80% stock, 20% cash. Wow. And that actually, and a much higher valuation than the first one. So, per share. So I think when you see the vote of confidence and in terms of people really seeing what you're doing and believing in it and really kind of giving you, I think, the family heirloom in many ways. It's extremely humbling and gratifying, kind of for you as an entrepreneur. And
Great.
so that part is great. And look, the asset I think is very unique, so we're very excited about it.
Excellent. And could you speak a little bit to jurisdiction risk? I'm sure you've really considered before you buy a royalty the government jurisdiction risk, and
Okay.
do you see any of that?
So we study that all the time. I mean, when you look at Tacataca, it's in the Salta province of Argentina, which is actually ranked as the #1 jurisdiction in all of Latin America by the Fraser Institute.
Okay.
It's extraordinarily mining friendly. So I think you absolutely have to spend an enormous amount of time knowing where you are. So we love Salta. I mean, I think kind of it's been super supported the mining sector. That's literally the lifeblood of the province. Chile, obviously, we've got a couple of major assets with Cachitas and Nova Union. So that's another country where copper is literally in the blood. Canada, obviously, is probably in many ways, I think, still the best mining jurisdiction in the world. So we have exposure to a couple assets in Zumant and Janus Lake, and obviously all the exploration royalties that we've got in the company. And I think it's a great place to be. So we have a royalty on Twin Metals in Minnesota. Look, it's a very strategic camp. Duluth complex is 34% of all U.S. copper reserves, 95% of all nickel reserves, 95%. At the same time, listen, copper nickel mining in Minnesota has been very controversial. So I think it will take a while for that situation to resolve itself. So I think you definitely have some risk there. I think over time, but given it's also a strategic camp, we think that at some point, if America wants to be self-sufficient, they'll probably have to look seriously in terms of what we want to do there. But yeah, look, and I think the price at which we bought it reflected that risk. So I think you absolutely have to spend an enormous amount of time understanding where you are, because it's not getting any easier anywhere.
Great. So we talked about, just how incredibly pivotal of a role copper is going to play in the new industrial revolution. We talked about how nickel is going to be required in a lot of these electric batteries, and it's not going anywhere, the demand for that, obviously. We talked about how Nova Royalty is well positioned, had first mover advantage, and picked up some really high quality assets early on and took advantage of that hole in the market, and how it's well positioned to take advantage of the growth in these commodities. So is there anything else you wanted to add?
No, listen, I mean, we're very humbled by the response to the company, by the market so far. I think we're still in the very early stages here of growing this business. There's a lot of exciting things we can do here to really add scale to the company. So it really becomes, I think, an easy way for everyone to participate.
Great. Are you working to get listed on some of the American stock exchanges?
I think that's something we're definitely contemplating for the future here. So I think as we pick up a little bit more scale and grow the company, I think it's natural to be listed there. It's just a question when we choose to do it.
Great. Okay. So where can people go to learn more?
They can go to our website, NOVRF.com. We also have, I think, Twitter. I need to ask my colleagues. I think we have everything. We have Twitter and we have Facebook, and the whole thing. I'm not the guy kind of who really keeps on top of this, but we've got I think all the usual social media stuff, and we have a website and a deck, and we're always happy to talk to people interested in the company. So by all means, we'd love to hear from you.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.